Well, they say April showers bring May flowers. But have you ever had an unexpected expense pop up that you just weren't ready for? Ugh, that sinking feeling in your stomach is the absolute worst. So today I'm going to share 5 things you can do to prevent that awful feeling and to prepare for a financially rainy day. The first point, adequate insurance coverage. Insurance is your first line of defense. That's exactly what insurance is for. So I know it's not exciting, but review your insurance policies. And I mean your homeowners, your auto, your health and disability to ensure that you're properly protected against major unexpected costs. That's your first line of defense there. So how much is adequate? That's a great question. Think about what you would need if you have to use the insurance. So for example, with your home insurance, does your coverage cover the cost to replace your belongings? Inflation has affected everything, guys. So have you looked at that recently and thought about the cost of actually replacing or refurnishing your home should something happen, or even rebuilding your home? Same thing with car insurance. Is it adequate to cover buying a vehicle to replace your current vehicle if you need to use the insurance? If you don't know, talk to your insurance agent and make sure that you are updated because coverages like this often do not increase unless you do something. So you got to be proactive with this. Special tip on insurance. Make sure you have the amount of your deductible saved in a dedicated savings account. So for example, if you have a high deductible health plan and your deductible is $2,000, wouldn't it be great peace of mind to know where that $2,000 is going to come from if you had to use it? So why not have a health savings plan, savings account, different from an HSA, I should say that, but your own savings account that you know that's where I can go if I need cash to pay for an emergency like this. Same with homeowners and car insurance. Having the amount of your deductible saved, very smart idea. While we're talking about savings, how about an emergency fund? Most people know about this. You don't have to love having a million savings accounts like I do, but at least have one emergency fund that you do not touch except in case of emergencies. Ideally, having 3 to 6 months of living expenses is perfect in this, but even if it's just a couple hundred or a couple $1,000, that's better than nothing. How do you do this, Laura? Setting up automatic transfers is the smartest way to do this. Basically, pay it like a bill. Even if you can only do $10 a week over 1 year, that's $520 that you would have in your emergency savings. So whatever you can do, set it up on automatic pilot and pay it like a bill. The next thing you can do, preventative measures. So regular maintenance on your home and your auto can help prevent costly repairs or replacements in the future. This is as simple as don't ignore the maintenance reminders on your car. Most of them have them automatically. I know mine does. So when it pops up and says, hey, I need something, pay attention. Get that maintenance done. Now, same with your home. Your home's not going to tell you that necessarily. So you could Google or ask your insurance company about what routine preventative maintenance you should be doing. Things like changing your HVAC filters, checking your fire extinguishers, making sure that they're working, getting your air conditioning service, things like this that would just help you to prepare for potential emergency and to detect any issues early on before a costly surprise. Here's another tip. Improve your credit score. Have you checked out your credit score recently? Many banks and credit card companies offer this for free, or you can use something like Credit Karma. But look not only for your score, but also tips on what is affecting your score. Do you have a high outstanding balance? Do you have a large number of accounts open? How to improve it? A side note, in my book, chapter 4 talks all about this in detail, and I've had people tell me that it's one of the most helpful chapters in the book. So there are more tips there. Bottom line, guys, a better credit score can give you access to more favorable borrowing options if you need to cover an unexpected expense. My last tip today is to review and categorize past unexpected expenses. So analyze your past year's spending and identify some common unexpected expenses. Maybe you have things with your home that just pop up from time to time. Well, maybe should you then have like a home savings account that you know you can go to when these things pop up. So reviewing unexpected expenses not only gives you a realistic picture of your finances, but also helps you anticipate and plan for future surprises. In summary, today we've covered 5 things you can do to prepare for life's rainy days and turn unexpected expenses into manageable moments. First, review your insurance coverage, prioritize setting up emergency savings, do some preventative maintenance and pay attention to that, Improve your credit score, at least be aware of what's affecting it, and evaluate past unexpected expenses. If you do even one of these things, it will really help you with your peace of mind and help you to have a better financial future.